Good morning, this is Connor from 500 Edge, where we trade SPX 0DTE options and ES futures. If you want to join the team, link in the description. In this video, I'm going to recap the previous session and break down what matters ahead of the opening bell. Wednesday was an easy trading session, taking a total of 2 trades, both to the long side. 7415 long call for 88% return and 7400 long call for 280% return. All trades posted live within our Discord server. This brings our total return on our 1% model portfolio to 19.76% since inception 8 days ago. We don't always have a strong directional bias coming into the open, but we most certainly had one yesterday. There were a lot of bullish signals pre-market, and we stated that the bull case was strong. XLK semis up, so strength ahead of NVIDIA earnings, which is a common pattern. WTI and yields down. This has been a headwind for equity, so seeing selling in oil and the rates market, definitely a positive. The reclaim of the SPX 7370 flip level often sparks momentum on the upside as gamma gets squeezed. Now, 7400 was still the resistance level, the major level to break, but we had mini tests and it was no longer the flip. So there was a higher probability of a break and hold. We did have one unknown in here. This was the VIX option expiration. Oftentimes, following VIX OpX, we see trending movements in volatility, but vol got crushed and that supported the upside. Additionally, we had a couple Trump headlines in there that were positive, which did help get that momentum going to spark the algo buying. Transitioning over to the SPX chart on the 5-minute time frame, price closed at highs 74.32, up 1.08%. Technology up 2.25%, and semis, ticker SMH, up 3.81%. Price did open with a gap to the upside, but we nearly filled that downside gap. On a positive note, another higher low, which is always the first indication of a trend change from down to up. Price reclaim 73.70 flip. And if we go to the 15-minute time frame, we actually did not get a 15-minute close below that flip level. We have bottoming wicks, which is telling us that demand was present. After some morning chop, momentum finally took off, and this was driven by a Trump headline, with price moving into 7400. Now, there was no rejection here, consolidation, which is most certainly positive, and that supported a breakout above 7400, moving into our next target of 7425, and entering this big gamma cluster between 7400 and 7450. In regards to our trend signals, which we utilize moving averages, we had the 20 EMA crossing above the 40 EMA early in the session, and the 8 EMA in orange was upsloping, indicating that bulls had momentum. For our trades, 2 trades, 7415, 7400. Now, the 7415s were entered pre-market, although there was no benefit. Would have had a much better entry price if waited for the cash market. However, we entered 7400 calls more or less right at the open off that 7370 flip level. We closed out half of that position on the break through 7400. So if you recall, we had a little bit of a gap here from the prior session. Additionally, closed the full position of 7415 calls on that same spike. And then we held a half position here because it was bullish. It looked like we were going to break 7400. And again, we were looking for a move into our next target of 7425, where we had another momentum candle on another Trump headline, and we closed the remainder of that position into that move. Another good setup here, which I did not take. Those were the only 2 trades. But if you waited for a pullback back to 7400, those moving averages, this was a decent dip buy as well. Of course, momentum died at that point. This was by far the best trade, the highest risk reward trade. But this was also another good entry point. In terms of the shorts, of course, you want to be a little bit tactical if playing counter trend. But we had a decent short setup here, 7430, overextension from the moving averages, potential retest of 7400, and that worked as well. In regards to market internals, we were +2 bullish for the full session. And this is our net market condition signal, which takes into account the VIX, tick, volume difference, advanced decline line, mags, and trend, and nets it out into one easy to read signal. There are 5 signal alerts: -2 bearish, -1 neutral to bearish, 0 neutral, +1 neutral to bullish, +2 bullish, giving you insights in towards the direction of the trend, the strength of the trend, and volatility. In regards to the 2 most important internals, ADD, which is a measure of breadth, and sector performance, they were both very positive. ADD plus 1400, essentially pinned there throughout the full session, telling us that it was a broad-based rally. And sector performance, we had growth sectors outperforming, tech, semis, the most important for the S&P 500. But again, it was a broad-based rally, so very one-sided, and of course that trend persisted, and we closed at highs. For today, early pre-market, we are seeing a little bit of weakness with the dollar up 0.2%, rates moving higher, led by the front end of the curve, the US 2-year, VIX up 1.3%, WTI up 1.3%, flirting with that 100 handle. And then all 4 major U.S. equity indices are in the red. SPY down 0.3%, Qs down 0.5%, and IWM down 0.7%. Semis down about 0.8%. Nvidia flat post earnings. So if we do see semis get sold again, that is going to limit upside and potentially exert downside pressure on the SPX. SPX levels are largely unchanged, with the notable exception of a shift higher in our flip level from 73.70 back to 73.95. This is our bull bear transition, above bullish, below bearish, and this has been a pivot point going back over a week. It was support, earned resistance, and potential support again today. In the event of a break below, it opens the door to 73.75. A gap zone from yesterday from 73.57 to 73.54, and then we have 73.50 implied low also in that range. This is a confluence zone on the downside, followed by more significant support at 73.38, which is the previous week's low, and then this week's low, which is just a few points below that. On the upside, we want to pay attention to the previous session's high, 73.35.36. A break implies continuation to the upside. Resistance 74.50 with a large gap on the upside. Entry into that gap is 74.55, fill 75.01 with a gamma zone right in the middle of that gap from 74.70 to 74.80. VIX OPX was yesterday morning, and we did see volatility crush supporting the upside, but we are getting a bid in volatility here post OPX, bouncing off the previous week's low. Post OPX, we get a lot of new flows coming into the market, volatility unpins, and it's more likely to trend one way or the other. We can see bigger moves in the VIX, and the recent weakness we've seen in equities hasn't really led to a bid in volatility. So once fear comes back into the market, which it will eventually, and volatility starts to catch a bid, that's when you're going to get large downside moves and follow through on those downside moves. And that's really going to be your indication to push short. So I would say keep a close eye on the VIX. I think jump risk is quite high at this juncture post OPX. Some levels to focus on: 17.1 or 17, 17.15, 17.6, 17.9, 18.3. But the major resistance, the upside target in the event of a vol bid, 19, 19.3, a zone where volatility sellers have been active, and then a break of that is where we can see risk-off conditions start to emerge. Total gamma exposure for the SPX is positive, 910 million notional, more than doubling from the day prior, and this is a result of reclaiming that flip level and 7400 where all the positive gamma is present. Flip level today, 73.95. As we can see, all strikes above positive, that is supportive for the market price. All strikes below negative, that is destabilizing for the market price. Implied move today, 1%. That is an implied high of 75.06 and an implied low of 73.58. Catalysts, housing data due out at 8:30, building permits and housing starts. And then, of course, potential for geopolitical headlines. Could be good, could be bad, but keep that news feed up.